Clay at claytrader.com. This will be analysis of some of the more popular futures markets out there for day traders. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. Real quick, one clarification before I start. I'll be using the 1 hour time frame. So if you're a beginner, what that means is that each one of these candlesticks here represents 60 minutes worth of time. So first market we will take a look at is the NQ. As a reminder, if you only trade the MNQ, well, the MNQ and the NQ mirror image one another. So you could still consider what I have to say here over on the NQ chart, or excuse me, on the MNQ chart. But overall, pretty wild day, and finally have some sideways action. And maybe you're saying this is setting the bar pretty low, but actually did not put in a new low today. And it's been a while. So those were the lows headed into the session, and the price was ultimately able to put in a low right there, which isn't much, but nonetheless, it is still higher than the previous lows. So maybe, just maybe, is this the start of something maybe bigger back to the upside? Maybe, just maybe, has the selling pressure alleviated itself enough where the price can make a push back upward? Still a lot of work that needs to be done, but it at least makes it plausible to suggest that. Again, no guarantees, but like I said, makes it a reasonable idea to suggest that maybe the bulls are finally starting to step back in. But moving forward here, the first initial key level of resistance is going to be that 50-period moving average right there, denoted by the purple line there. You can see the price just slightly blow up. But even if the price does get above it, I wouldn't get overly excited, because then you're going to have that 19,770 mark as that next key area of resistance. And if the price can push up through there, I'm not saying that the price will all of a sudden just shoot straight up to that area. But looking back here on the chart, it starts to kind of thin out in terms of potential areas of resistance. So a good high volume break of that 19,770 mark, I could see bringing in some good solid bullish momentum. But again, no guarantee, so you got to always factor that into your decisions and make sure you're managing that risk. In terms of areas of support, nothing here to really, focus on more so than just where the price finally found some buyers today. Mapped out this level previously, right around this 19,280 mark. And wasn't exact, but again, broadly speaking, there were plenty of buyers that stepped in down around that area before the bounce showed up. So as long as the price stays above there, then you can at least still make the argument that maybe it has bottomed out, and maybe, just maybe, it's getting ready to curl back up. So we'll see how the next couple of sessions play out. Next one here, we are taking a look at the ES, which is measuring the S&P 500. And same general idea as what we just looked at here with the NQ. Although the one difference is the NQ, remember, think about that one. That was very close to potentially doing battle with the purple line, which was the 50-period moving average. Here, not so much. It's not super far away, but the price does still have to travel a bit of a distance before it can even do battle with the purple line. So keep an eye on that, but also just remember that even if the price does push through that purple line there, you're going to want to keep a close eye on that area of resistance right there, currently valued at the 56, we'll call it 75 mark. So 56.75 will be that following area of resistance, but first the price will have to break up through that purple line there, which has been a pretty big thorn in the side of the bulls. In terms of levels of support, right now this line here, I'm going to go ahead and, now that we have more data, make a slight little adjustment, because with the more data, seems as though the more accurate area of support would call it right there around the 558 mark. So 558 going to be that key level of support to watch moving forward. And just like the NQ, as of right now, you can start to make the argument, okay, it's going sideways. So is this sideways movement the leading indicator that there's about to be a bigger move up because the selling pressure has alleviated enough? Nobody knows that. It's at least a credible argument to make as long as it goes sideways. But if all of a sudden the next session, the price just blasts down through there, well, all of a sudden that's new lows, so it doesn't make a whole lot of sense to say, hey, I think the price is done going down, when all of a sudden it's gone down further and broken through those lows. So that's going to be an important area, because it keeps the argument alive that maybe, just maybe, the bottom is in and that there's going to be some sort of attempted curl back upwards. Next one here, taking a look at the YM, which is measuring the Dow Jones. And yeah, this one had a much rougher move. I mean, it broke down below that area of support that I mapped out in the previous video. Now, to give credit, it did recover back upwards kind of, but nonetheless, Dow Jones, again, via the YM, rough day today compared to the ES and the NQ, but we'll see if it can try to recover back around. So in terms of areas of resistance, and this is another way to look at it, nothing new here in terms of that level of resistance. It's still all about that purple line up there, 50-period moving average. But think about how close the NQ was to potentially breaking it. Think about how much closer the ES was. Not as close to the NQ, but now look how far this one's got to go just to do battle with it. So there, that's kind of illustrating the differences here and how the weakness of the YM compared to the other indices there. So just kind of keep an eye on that dynamic. In terms of areas of support, now that we have more data, I would just say that it probably makes most sense now to just call this a key area because that's essentially no fancy logic here. Where did the bleeding finally stop today? Finally stopped down there at the 271 mark. So keep an eye on that moving forward from a support standpoint. But if there is going to be any sort of attempted bounces, then yeah, just continue to watch a purple line there. 50-period moving average right now valued at 42,209. But yeah, YM is certainly looking the weakest of the three. We are now moving out of the indices and we are moving into the oil market, specifically crude. So taking a look here at CL, and this will mean a little bit more to those of you that have watched past videos. But if you have, hopefully remember me talking about that red line right there and how I thought it probably plays some significance. And I mean, check this out. You can't make this. I mean, look at how that just cruised right around that area and could never build any sort of momentum. So this line is not in the sense of the price just flat out can't break above it. No, that's not true. The price can break above it. It's gotten above it several times, but this is even trickier because what happens is the price gets above it and then the momentum just disappears. And that happened 4 times. In fact, I guess you could count right there another time if you wanted to. So point here moving forward is just because the price breaks above that level, I would be skeptical because you don't want to be caught in one of those situations where you think it's breaking out, and then all of a sudden you have one of these situations occur and the momentum just disappears and then back down below the line it goes. So on the good news front, the price is still very close to potentially doing battle with the red line and maybe making a push up through there. But again, you want to be very careful and make sure you don't get yourself stuck in some sort of fake breakout because that has been the theme after today. A lot of fake breakouts of that trend line right there. If the price can get a true breakout and start to get some good separation, next key area of resistance to keep a close eye on would be that pink line up there. 200-period moving average right now valued at 67.75. In terms of areas of support, still all about 65.60 down there. So keep an eye on that. And as long as the price stays above there, then a lot of, like I've said on these other ones, the argument is alive that maybe oil has put in some sort of bottom and it's going to try to make a bigger move back to the upside. But all in all, continue to definitely watch that trend line very closely. Now moving into the world of precious metals and specifically gold. So taking a look at GC, and what a very, very impressive movement here. Just yesterday when I was doing the video talking about how, things were looking sketchy, it was down around this area here. Was there going to be a nasty breakdown? But you can see a beautiful hammer candle showed up right there. And the rest is history. A very, very impressive bounce. How impressive of a bounce? Well, let's look at all the levels of resistance it broke through. So it broke through that red line right there. It broke back above the pink line right there, the 200-period moving average. It broke back above the purple line there, the 50-period moving average. So it just busted through all sorts of levels. So I'm not saying that today was a good day simply because it was a green day. Of course, that contributes to it. But from a technical standpoint, I'm saying it was a very good day because it broke through so many areas of resistance. So very, very solid day for gold. I'll get rid of that level for now. And the first key update, I would just say, based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. And especially in this case, I'm not saying this is what's going to occur, but if the price were to come down here and then break down below it, what would you have? Well, you'd have the price essentially now going right back to where it was. And I mean, not to insult your intelligence, but price movements that make nice moves and then go back to where they were, not exactly a sign of true, genuine power. Whereas on the flip side of things, if the price comes down here, behaves like this, and then curls back upwards, now all of a sudden, what would you have? Well, you'd have a set of lows right here. You'd have a set of lows right here. If you envision each of those as stair steps, well, now you'd have stair steps progressed in the upwards direction, and that's what truly strong moves are going to do. Not go straight up. Nothing can go straight up, but at least show signs of progress. So keep a close eye on 2906, and then in terms of areas of resistance, all eyes now, you got to think up there on that 2940 mark. So we'll see if this can make a move upwards and do battle with it. But all in all, very nice session here for gold. So that wraps up the analysis, but before I go, I want to personally invite you to get signed up for this free live online webinar that I'm offering here very soon. So if you've been enjoying what you've seen, you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free class. If you're watching on YouTube, there's a link down below in the description area, or if you're watching right at my website, there's an area on the webpage that you can use to sign up. But like I said, it'll be later this week on Thursday, March 13th at 8 p.m. Eastern Time, so I hope to see you there. As far as these analysis videos are concerned, as always, if you enjoy these, hit that like button, and if you're looking for a super free and easy way to support the channel, make sure you hit that subscribe button. So thanks for watching, and make sure you get signed up for the free class.